understand more about the market outlook, with this, let me welcome two of our very special guests. Onto the technical front, we are being joined by Rajesh Palviya, Head Technical and Derivative Research at Axis Securities. And on the fundamental side today, we are being joined by Chakri Lokapriya, CIO and MD at TCG AMC. Very good afternoon to both of you, and thank you so much for your time. Firstly, Rajesh, wanted to understand that what are the next levels that you are looking out for on the technical front. Clearly a breakout on Nifty 50 as well as the banking index was supportive too. So is 22,000, will that be an easy catch for the benchmark indices now?
Good afternoon, Srishti. Yeah, definitely. So now this momentum can continue further, and we might see this 22,000 beyond level also in the coming week. Very strong buying action led by the short covering. We have seen consolidation of Nifty in range of 21,550 to 21,750, and this clear breakout on the daily weekly time frame. And the put call writers have also shown some covering on their writing position at 21,700, 71,800 strikes. That clearly shows this momentum can continue, and we may see a 22,000 and 22,200 kind of level in the coming week. So the strategy would be now one should trail their stop loss at 21,750. That's the important level on the downside for Nifty spot. Till these levels are intact, we expect that this rally can extend for 22,200 kind of target. For Bank Nifty, the immediate resistance area or supply zone, which we can say like at 47,800 on a spot. Once we able to cross this level, then yes, definitely Bank Nifty may also support to this momentum, and possibly Bank Nifty can also witness a short covering action. Then a possible target in coming week we can see towards 48,300 to 48,400 for Bank Nifty. So again, the structure is also looking promising for Bank Nifty also. At this moment, we are holding our long position, and we suggest here to keep stop loss at around 47,500 to hold long position for Bank Nifty also. And another sector that IT has also shown good traction. So I believe that overall structure, market breadth, mid cap, small cap, everything is moving up. So we believe that this rally can extend in the coming week also.
Right, so stop loss of 47,500 suggested for Bank Nifty. That's the word coming in from Rajesh. Good afternoon, gentlemen. This is Lisa joining in. My question goes to you, Chakri. I want to pose this question on the IT sector. Well, we saw the Nifty, the index is surging on the back of the IT which has powered the indexes, and this is on the back of the IT results, the results commentary that exceeded expectation. So where do you see Nifty IT heading from here? How are the IT results expected to perform the other IT majors as well?
Oh, and if you look at IT today, whether it's TCS or Infosys, both the results kind of indicated one thing. Financial services as a client base for the IT sector is very important in the US. And it's that kind of slowed down in the last year because of the interest rate hikes in the US. Now, there have been signals from the Fed that, they're going to not just pause, but start cutting in 2024. So for the reason why IT fell in 2023 is the reason why it'll rise in 2024, because orders which were out in the limbo are going to come back alive. TCS is the first beneficiary of that. Infosys, again, will benefit not just from IT, but the new order wins, not just dormant orders, but new orders have also shown a pickup. So against this overall backdrop, now operating margin leverages will kick in as the top line grows. So I think this story will repeat itself across the IT sector pack. And the valuations are okay. Earnings growth will start accelerating.
Because Chakri, next week is going to be an earnings heavy, and HDFC Bank as well as IndusInd Bank are the two banking majors, apart from Federal Bank, and so they will also come out with their numbers. So any hopes of great set of numbers there? We have seen their operational updates coming in. They looked pretty decent, not much of a worry there, but some reports suggest that this time the NIMs will be the key to watch out for. So do you believe that given the underperformance or the sluggishness in HDFC Bank, that could also get a boost post the earnings this time?
The key word there is a decent set of numbers. I think that we will kind of get, but some of the merger-related issues of merger-related costs rather of HDFC Bank will continue to hold back some of its ratios as well as its growth rates. So, given the fact that it's also trading at a valuation which is in line with its marquee status, I think the numbers will be kind of okay based on the current run rate, etc. And so I think, it's far more to be enthused about the other banks, whether it's the PSU banks because of the strong order inflow that we're seeing in industrials, etc. And they're the beneficiaries. And some of the frontline, ICICI is a steady mix of various kinds of businesses. So I think that's the way we will approach it.
All right, thank you for that, Chakri. But with that, let's slip into a short break. But stay tuned as we come up with where the market is headed, what's the direction of the market going ahead next week. So stay put on the show.
Welcome back to Your Trades on ET Now, where we are discussing about the outlook on the markets ahead this particular week. And we have two of our very special guests today, Rajesh Palviya on the technical front as well as Chakri Lokapriya. But Chakri, coming to you for the next question, and I just wanted to understand your current view on the broader market space, because though today on Friday itself we have seen Nifty hitting a fresh record high for itself, and in that a lot of sectors, and especially this IT pack, has participated in a great fashion. But going ahead, keeping earnings in view as well as the outlook for 2024, do you believe that this time is for the large caps only to perform in a better fashion? And in the small cap and the broader market space, where are you eyeing right now? Where is the opportunity that lies ahead, you feel?
Great questions. And going into 2024, I think both the large cap and the broader market will both participate for the reasons that, the earnings are picking up across board. You have seen earnings upgrade. This quarter, we will see across sectors maybe 2 to 3%. This is a sign that, things are improving. The reason I think that the broader market will do well is the government's push in industrials, defense, railways, etc. These are all in the broader market. Now that push and the order book is not slowing down, and therefore you will see very strong earnings growth in that space, industrials, manufacturing, etc. Now, on the other hand, the large cap, which is let's say the Nifty, metals were cyclically down. There'll probably be some revival. IT, there's clearly going to be a revival. The large cap banks, also there's going to be, the credit growth is about 20% going into next year. And so I think these are the facts, and banking as a sector is having 70% of the overall credit. Good sign that, they're having the market, they're taking market share. So I think the large sector, the large cap does well. The broader market continues to strengthen.
Right, so large caps continue to do well. Rajesh, coming to you, what are
keep your stop loss at 15.15. The another stock is from banking space, and we believe that in today's session most of the PSU bank have done well, and we believe that PSU bank can continue furthermore upside. So here we are recommending to buy Union Bank. Series of higher top, higher bottom formation. The stock is trading about all its short-term, long-term moving averages. And in today's session, there is a breakout on the weekly chart also. So we believe that Union Bank can be a buy for upside target of 144. Keep your stop loss at 126. And the third stock is from oil and gas sector. Most of the oil and gas stocks are doing good. ONGC is clear outperformer. The kind of breakout which we have seen in monthly chart that clearly shows that ONGC can continue furthermore upside. So we are projecting targets toward 240. So ONGC is buy with stop loss of 219.
All right, so those are the top recommendations coming in from Rajesh. But with this, Chakri as well as Rajesh would like to thank you for joining us today in this weekly edition of Your Trades and helping with your outlook on the markets. It was great having you.